Why do most traders lose money? Most people think it happens asterisk. After asterisk, they enter a trade, but that belief is completely wrong. Because by the time most people click that buy or sell button, the trade is already dead. Not because the market moved against them, but because the decision itself was flawed from the very beginning. Today, I want to show you something uncomfortable. Something most trading videos will never say. If your entry is wrong, discipline won't save you. Risk management won't save you. Psychology won't save you. They will only slow down the damage. And once you truly understand this, you will never look at the charts the same way again. There's a big lie in trading. People love complexity. They stack indicators on top of indicators. Their screens are filled with flashing signals and complex strategies that look super intelligent, but perform terribly. Everyone talks about three pillars: entry, risk management, and psychology. And you're told that these three are equal partners. But my years in the market have taught me something brutal. They are not equal, because only one of them decides whether the trade even deserves to exist, and that is your entry. If you start from the wrong location, everything that follows is just emotional damage control. You're no longer trading probabilities. You're just negotiating with hope. Imagine stepping into a boxing ring. Before the bell even rings, you drop your guard, and your opponent lands a clean, hard shot right to your ribs. You haven't lost the fight yet, but you've completely lost control. Now every movement hurts. Every step feels unstable. That is exactly what a bad entry does to your trade. You can still win, technically, but you're not executing a plan anymore. You're just surviving. And that's where most traders live, in constant survival mode. A bad entry does something incredibly dangerous. It puts your emotions under immense pressure right from the start. Your stop loss suddenly feels way too close. Your position size feels uncomfortable. Every single candle that forms feels personal, like an attack. And then people start saying things like, "Oh, I just need to manage my psychology better." No. Your psychology didn't fail you. Your position was weak from the moment you entered. Strong entries create calm, confident traders. Weak entries create emotional wrecks. That truth alone explains why most traders can never find consistency. When I first started trading, I believed that money management was everything. I was obsessed. I calculated my risk percentages down to the decimal. I had what I thought was perfect stop-loss placement. I focused on my reward to risk ratio. I journaled every trade. I analyzed my emotions. I did everything right, according to the books. And I still kept losing. Not dramatically, but slowly, quietly. It was death by 1,000 small losses. Eventually, I realized something painful. I wasn't undisciplined. I was just entering in terrible locations. I was building perfect discipline on top of a broken foundation. I remember this one trade on gold that taught me a hard lesson. The trend on the higher time frame was clearly bearish. No question about it. But then, the price suddenly exploded upward. A huge, powerful bullish candle appeared out of nowhere, and my mind started whispering, maybe this is it. Maybe this is the reversal. So I bought. At first, the price moved a little bit higher, just enough to feed my ego and make me feel like a genius. But then, the market reminded me exactly who was in control. The price collapsed violently. No support, no mercy. The loss wasn't because I didn't have a stop loss. It was because I fought the market's structure with pure emotion. Then came the sideways markets, the ones with no clear trend, no clarity, just choppy price action. I hated those conditions, but I traded anyway. I'd jump on tiny moves, follow fake signals, and take random entries. Why? Because doing nothing felt like failure. But the market doesn't reward activity. It rewards selectivity. Most traders don't overtrade because they're greedy. They overtrade because silence makes them uncomfortable. So what is a real entry? A real entry is not a prediction. It's about positioning. You're only asking one simple question. If I'm wrong, how little will it cost me? Good entries give you breathing room. Bad entries suffocate you immediately. That single difference decides everything. Your risk management can't create an edge where one doesn't exist. Your psychology can't create probability out of thin air. They can only protect what's already there. If you keep entering in poor areas, All discipline does is ensure you lose politely. But when your entries are strong, everything else becomes so much easier. That's why professional traders trade less, not more. After years of making these mistakes, I simplified everything down to 3 rules, and these rules changed my entire career. Rule number 1, trade with the higher time frame trend, always. No exceptions. Rule number 2, never act on a single signal. One candle means nothing. Wait for confirmation. Rule number 3, enter where your invalidation point is close and clear. Don't enter where the profit looks exciting. Enter where the risk is small and controlled. That is professional thinking. The market's real weapon isn't volatility. It doesn't defeat traders with wild price swings. It defeats them with time. Hours of nothing. Days of boredom. Weeks of just waiting. Time erodes discipline. It whispers in your ear, just do something. Take a trade. That whisper is what destroys accounts. The market tests your patience long before it ever rewards your skill. Every single time. Think of trading like fishing. You don't just run to the lake and start splashing around in the water, hoping a fish jumps into your hands. You find a good spot, you cast your line, and you wait. You wait patiently. Opportunities don't just disappear, they reveal themselves to those who are patient. There were days when I took no trades at all, and looking back, those were often my most profitable days. Because not losing money is a form of winning. Here's the final realization you need to have. The market is infinite. Your capital is not. Missing a few good trades will never ruin your career, but chasing bad ones definitely will. Your entry isn't everything in trading. That's true, but without a good entry, everything else just collapses. The market doesn't reward speed. It rewards patience with precision. And once you truly understand that, you stop gambling and you finally start trading. Thanks for watching, and I'll see you in the next one.